to another episode of Moscato and Mortgage Mondays. Now, we have an elevated chapter of this Instagram TV show, and it has a new look, a new feel, a new vibe, and I am so excited to be hosting my very first guest, Lashonte Harris. This has been my preferred lender ever since I started my career in 2019. So she has been assisting me when I barely had any clients to all the way now with a surplus of families that we have assisted over the years.
Absolutely.
I am so excited to have you.
I'm so excited to be here. I mean, this is just so beautiful.
Thank you.
I love it.
And I see we have another baby lender on the way.
The mortgage baby debut.
How many months are you?
5.5.
Oh my goodness. You look amazing.
Thank you.
And you are still taking all of my clients and handling everything so gracefully.
It doesn't stop. It is not going to stop. It actually makes me want to go harder.
Well, I have a little gift for you.
You do?
Because I am so happy for you and so excited.
Oh, Bree!
Now, this is a few things for...
A few things, Bree.
Yes. And I included actually a little piece from my boutique that I just launched. So, and it's stretchy, so I want you to be able
Sunset 22.
Yes. And then this is for you.
Thank you so much, Bree. Do you want to know something?
Yes.
This is the first gift that the baby has received in 5.5 months.
Goodness, really? Are you gonna have a baby shower?
Eventually.
Yeah. I figured, because
This was so sweet.
Yes, absolutely. Since we already know it's going to be a girl.
And I love you. Thank you, Bree. That was so sweet.
Of course.
So sweet and so thoughtful.
Absolutely. So I am going to be having some pink Moscato, but I do have some apple cider for you. So we can have a little mocktail as we are discussing everything.
Yes, I have to come back.
For sure.
You know, when I can partake.
Okay, so let's get right into it. With the volatility of the market, a lot of clients are asking, is now even the time to be purchasing a home?
Right.
That is like the very first question. Interest rates are crazy. None of us have a crystal ball to really be able to see what to predict or what to anticipate the market. So that's my very first question is right now the time to purchase a home?
Absolutely. So my answer to that is always, if you can afford it, absolutely. Now is the time to buy, because interest rates, you're not married or tied to an interest rate. Interest rates fluctuate and go up and down. What you are going to be tied to is home equity and the value in the home. So if the mortgage payment is something that you can afford, buy now. Capitalize on home equity while values are still increasing. You're able to take advantage of building that equity now. When interest rates go down, you can always refinance, get into a lower rate at that time, but don't let rising interest rates, which is something temporary, stop you from becoming a homeowner. Okay, so let me ask you this, because a lot of people are under the impression that the interest rates that we've seen in 2020 are something that are going to drop that low again. And of course, I know the answer to this, absolutely not, because we were in a pandemic. But do you think that interest rates will ever get close to that? Do you think that how low will they get? And when do you anticipate the interest rates to decrease? So I'm going to answer that question twofold. Okay. So of course I'm going to give my opinion. Like you said, there's not a crystal ball. I wish I had one, because I would be super rich. So I'm going to give my opinion and what I think, and we'll see how right I am in the next couple months. But just to kind of give a little bit of background on it, I know we have these conversations all the time, but we were, during the pandemic, we were at a point where the government was really encouraging spending, take out loans. So we were at a place where interest rates were drastically low. Lower.
A lot of our clients have like 2%.
Exactly. And that was really unheard of in years and years in a history of mortgage interest rates. We were at really, really low rates. And that was to encourage and to stimulate the economy at that time. You know, we were going through a pandemic. People don't know what's going to happen. So at that time, let's encourage spending. Let's encourage people to go out. We're going to lower the interest rates. So now that we're going back towards a normal market and a more normal economy, we see the reversal of that, right? So now, unfortunately, we see a drastic increase because we saw such a drastic low.
Right.
So I agree with you that we may not get to a point where they are that low. However, within the next 12 to 18 months, I do believe we'll see inflation start to kind of smooth itself out, and we'll see rates go back to the 4s, 5s. That's my prediction within the next 12 to 18 months.
Okay.
So let's see what happens.
Yeah, and I agree with that because my interest rate on my very first property was like 4.5 or 4.2, something like that.
Exactly.
And it was like, if I would have kept telling myself, okay, interest rates are too high right now, let me wait. And then now they're at a 7%, I wouldn't have been able to take advantage of all of that equity because I purchased that home, built some equity.
When did you buy that house?
In 2017, actually, the year I got licensed, in 2017. And then I ended up renting it out.
Right.
So I was making passive income.
Right.
And then when I sold it, I made 6 figures.
So in the course of 5 years. Took that home, used it, made 6 figures on it. And now that I know you personally, you have several properties just off of that one investment.
Right.
But had you waited or been afraid because of the interest rates, that couldn't have been possible.
Exactly
the same for me when I bought my first house in 2015. To be honest with you, I don't even know what my interest rate was. I don't think the conversation around interest rates was such a big deal then. It was more so, which is what I preach to the families that we work with, payment. Interest rate is important, of course. I'm not going to try and say interest rate is not important. But the payment is what we should focus on. Right. Where do you feel comfortable? Let's look at your budget. What can we afford monthly? And as long as that home fits in that monthly payment, buy. Okay. Buy. I couldn't tell you, to be honest, what my interest rate was on my first home. But just like you, I was able to, now I'm on property number 8 because of that very first property, being able to realize 6-figure profits. There's not another investment. Right, that can do the exact same thing in such a small amount of time. Exactly. And I do feel like us as first-time home buyers, it was just the excitement of buying a home, the necessity to buy a home, wanting to really change our backgrounds, kind of where we come from, being able to do something different. I feel like they could have told me it was going to be 10% and I would have still purchased a home and I would have still. You know what it is? The media. There's so much emphasis on it right now. Everyone is focusing on it, and it's like, I don't really think you guys understand what is the media is driving that conversation. You know, there's a lot of fear. There's a lot of things being pumped through the media. What the agenda behind that is, you know, I don't know. But it feels weird to say, like, back then we didn't have that because, like, we're, you know, younger. But during that time, it was not such a big thing. You know, the media didn't have that agenda. So it was, hey, this is my goal. This is what I want to do. And what do I need to do to make it happen? Right. And now there are going to be people watching this that are seasoned buyers, first-time homeowners. So I really want to make sure that we're speaking to everyone's, you know, experience level in the home buying process. Explain to us, what is the importance of the interest rate and what does it affect exactly, and how can you, even if you have a high interest rate, what can you do to lower your monthly payment? That's really a great question. So interest rate. included in the mortgage payment for 95% of people. You have your principal, which is over the term of your loan going to pay the balance down to zero. You have the interest, which is the portion that goes to the bank for them lending you the money. So that's where your interest rate comes into play.
And that's just the cost of borrowing money from a lender.
Yeah, like that 14% auto loan that
everyone is so comfortable paying.
That 23% credit card.
That's a whole nother conversation for another show.
Absolutely. Every piece of debt has a cost to borrow. It has an interest rate tied to it. But when it comes to mortgage, the interest rate is directly associated with the amount of interest that you're paying back to the bank. Also in that payment, you have your property taxes and you have your homeowners insurance and mortgage insurance. So all of those pieces, you got it. All of those pieces make up the mortgage payment. So of course, the lower the interest rate, the lower the mortgage payment. The higher the interest rate, the higher the mortgage payment. So the interest rates change on a daily basis. There are over 30 factors that go into determining what an interest rate is. So they change on a daily basis. Once the interest rate is locked in, like I said, at any time you can refinance and get into a lower interest rate. Right now, because like I said, my prediction is the next 12 to 18 months, we're in this higher rate environment. There are some things that you can do to temporarily reduce that hit. And one of those things is what's called a temporary buy down. So in any market, there's always options to buy your interest rate down. So that means you can pay points to basically get a lower interest rate.
Okay.
So what that does is permanently reduce the interest rate for the life of your loan.
Okay.
You can also do what's called a temporary reduction.
Okay.
So without going like into too much detail, there's a 2-1 buy down, which means for the first 2 years, you get a break on your interest rate. So let's just take an example. Today, your interest rate is 6.5%. For the first year, you get a 2% discount on your interest rate, and it goes to 4.5%.
Okay.
For the second year, you get a 1% reduction. So then it goes to 5.5%.
Okay. Now let me pause right there because I know everyone is going to be like, this
rewind that part.
Let's take this back. And I know people are going to think it's too good to be true. So just to kind of recap and make sure that we're on the same page, for the whatever the market rates are now, for the very first year, it's going to be a 2% decrease in the interest rate. So if it's 7% now, it'll be 5% for the first year.
Right.
And in the second year, it's just a 1% decrease. So the second year, it would be 6%.
Exactly.
Okay. What does the cost of that look like? Because I know that that's not free.
It is not free. There is a cost associated with it. One of the beautiful things is that the seller can pay for that for you.
Okay.
Generally speaking, it's about a point or 1% for each year. So if you do a 2-1 buy down, it's 2%.
Okay.
There's also something that we have called a 3-2-1 buy down. So you have 3 years of discounts that you can actually pay for. And that's about, the same increments as far as cost.
Okay. Does it start with a 2% lower?
3%.
3% lower.
So year 1, you get a 3% reduction.
And then 2, and then 1.
Yes.
Okay.
So basically what you are doing in a nutshell is prepaying the interest up front. And that's where that fee goes. When you do a traditional rate buy down, it is just to pay for a lower interest rate. So the beautiful thing about the temporary buy down is that none of those funds are actually lost. So the whole point is to give you time for the market to correct itself and for rates to go down. So let's say within the next year, we see interest rates decrease. You are ready to refinance. The money that you paid or the money that the seller paid for you up front, you actually get that back. Okay, so any of those funds that you haven't used is refunded to you.
Okay, so it's a discounted refinance then, depending on when you do it.
Exactly. So basically you're prepaying the interest you're paying it up front instead of paying it over the life of the loan.
Okay.
But the beautiful thing is, like I said, you can negotiate for the seller to contribute or to help pay for that in this market. So a lot of times we're able to kind of use that as a negotiation strategy. Instead of reducing purchase price, let's, help the buyer get a more affordable mortgage payment.
Okay. And then knowing off the top of my head that conventional loans have a maximum seller contribution of 3%.
Right.
So if we're talking about a price point of $500,000, $15,000 can be contributed from the seller
Absolutely.
to the buyer's total cost.
Absolutely.
So if the buy down is only 2%, which is $10,000, they could actually still have $5,000 to reduce their total cash to close.
Right.
And then I'm a little bit rusty on FHA, but FHA is a total of 6.5%.
6%.
6% of seller contribution to the buyer's total cash to close.
Right, you got it.
So depending on what me as a expert negotiator.
The expert negotiator.
Depending on what I can get the seller to contribute,
right,
this buy down essentially can be
at no cost to the borrower.
At no cost to the borrower.
Absolutely.
Okay. Perfect.
Absolutely.
So, is there a penalty for refinancing at a certain point once you do the 2-1 buy down or the 3-2-1 buy down? What does the refinance look like in those years?
There are no restrictions.
Okay.
There are no restrictions because again, this is your money. You prepaid it. So anything that you don't, what happens is when you make your mortgage payment, the mortgage company is going to take from this bank that you paid up front to supplement the lower payment that you're making.
Okay.
So it's your money. At any point, when it's time for you to realize a lower interest rate, it's no penalty.
Okay. And for those who have not ever done a refinance, or let's say it's a first-time home buyer that is still in their home,
right?
What is the process of that, and what is the cost of that? Like, let's say if I literally want to refinance my home tomorrow,
right?
Who do I call? How much is it going to cost me? What can I anticipate throughout that process?
Yeah, that's a super good question because for a lot of people, the word refinance seems so scary. It's like scarier than purchase.
Literally.
It's like, what is that, or how do I do it? It just sounds like a lot, but it is actually just a restructure of the loan that you already have. Okay. And 9 times out of 10, it's gonna be way more simple than the purchase because we've already given you the money. Now you have established a payment history and you've shown that you can pay this mortgage on time. So literally contact the loan officer who did your original mortgage. They can restructure that loan for you. 9 times out of 10, they're gonna have most of your documents on file and it's something that can be done within 14 to 30 days.
Okay.
Super simple process, literally just updating the documents that we should already have on file for you.
Okay. Is it affected if, like, let's say someone's employment has changed? One of our past clients has had a bit of a reduction in their income after being let go from a salary job. Right. What does that look like if their income is changed? And yes, they can still afford the payment, but they didn't have such a surplus of money at the time of closing. So when you do a refinance, we are reevaluating your purchase power. Can you still afford this mortgage payment on paper? Okay. So you do have to submit income documents just to make sure you can still afford it. So there are no income document refinances that you can do. So the first step is talk to your loan officer. Let's see where you are, what has changed, and figure out the best route for you to take. Okay. And then what is the cost of that? So for a refinance, generally you are gonna pay whatever the mortgage fees are. For us, it's usually like $1,000 to redo the loan. Okay. You're gonna pay attorney fees. So the attorneys still have to pull title, make sure you don't have any liens or you didn't pay a mechanic or something like that. So the attorney fees are still gonna be there, usually about $2,000. So I would say anywhere between $3,000 to $5,000 in order to do a refinance, but that's not something you have to pay out of pocket. It can be rolled into the loan. Okay. So 99.9% of the refinances that we've done, the borrower does not have to bring any money to the closing table. Oh, perfect. Okay, I actually didn't know that. I assumed that it was all of the fees have to be paid at the closing. That's one of the beautiful things about buy now, worry about the interest rate later. Because you have to come up with the money when it's time to purchase. You have to go dig into your pocket, but when it's time to refinance, it can all be rolled into the loan. Okay, great. Okay. So now I know I want to shift gears for a little bit because I'm getting this question now more than ever. when I kind of started my career with you, I feel like we were killing things with down payment assistance.
Yes.
We were getting people moved into homes with absolutely nothing out of pocket.
Absolutely.
With extremely low interest rates.
Right.
Are there any more down payment assistance programs? And if there are, give me some of the requirements, some of the just what that general guideline looks like.
Yeah, there are still programs out there. I think that there will always be programs out there. The biggest thing is each program is unique and different in itself. I know for every state, every county, there's usually a different program or some type of home buying assistance that you want to look into for your particular area. But in Georgia, there are several programs that are still out there. There are different credit criteria, there's income limits, there is debt to income ratio requirements. So yes, there are still programs out there, and yes, we still do them. It's just, can you qualify for them? Right?
Okay.
So there are a couple 100% financing programs, which means the only thing you have to worry about are your closing costs, the attorney fees and the taxes and things like that we talked about. And these programs will cover your down payment for you.
Okay.
So there are still some 100% financing programs. Of course, there are pros and cons. This is something that I always explain. There are pros and cons to every decision, right? Like every decision. Sometimes the programs are going to have a higher interest rate, or you might have higher fees associated with going that route versus using your own funds. But sometimes it still makes sense to do those things. So the best thing to do is to apply.
Okay.
When we do an application, we're going to match you with all the programs that you qualify for. Whether you're interested in them or not, we're going to say, hey, this is what you can do. Here's a program. This is why you don't qualify for it. So at least you feel confident that this was a one-stop shop. I know all my options, and here are the programs. I would say one of the cons, of which is probably not as bad now than it was, is that some of these programs take longer. So in a traditional closing, you can close pretty quick. You can close in 2 to 3 weeks. When you couple down payment assistance with a purchase, it can extend or sometimes double the closing process. So that's one of the cons that you might qualify for, but it's gonna be tough for you to get a seller, to accept that offer. Okay. So that's just some of the things that we talk about during the consultation, but at least you know what you qualify for, because there are still programs out there.
Okay. And then some of them are going to have area restrictions.
Right.
And then as well as maximum purchase price.
Exactly.
Points that you can't exceed.
Exactly.
Because I've had a lot of clients that were interested and they qualified based on their income, based on them having strong credit. And then they were like, okay, that caps me out at X amount.
Exactly.
I'm looking for something a little
like, I can't find a house for that.
Right.
But here's the programs, and they really are working to kind of get in line with where the market is right now, because things just change so drastically. Some of these programs just have money sitting and piled up because exactly what you said, a lot of people aren't able to utilize it because of the maximum purchase price. So I know a lot of the relationships that I have and the conversations that I've had, they are working to get in line with where we are as a market right now. Because
the average purchase price in Atlanta is almost $500,000.
Isn't that crazy?
And that's like entering jumbo loan territory, especially depending on the county.
But you see the jumbo loan, the conforming loan limits just had to increase. To kind of get in line with, okay, I see what's going on here, and prices and costs are, rising, so they had to get in line. I think the same will happen with the assistance programs.
Okay. And that's what I love about working with you for this many years, is that I feel like there are not many lenders that match my work
Your
ethic.
fly?
Yeah. My fly too, But my work ethic, I feel like as I have entered different price points and I have become a certified luxury agent, I'm never going to discourage anyone from, working with me based on my average price point. And I can appreciate that about working with you, is that if we get a client that is approved for down payment assistance, it is a lot of extra work, like a lot of extra work.
Right.
But I feel like we are both still holding on to the reason that we got into this industry,
right?
Which is to turn everyone into a homeowner if they are willing to follow the process, willing to work with us exclusively. So I thank you for that, for always being able to take clients that are looking for investment properties, that are looking for condos, that are looking for, things that we may not work every single day, but we're still very experienced in those price points.
I think that makes you as an expert invaluable, because you can speak to any client, regardless of where they are in the process, regardless of what their goals are, because we have this experience, because we've done these types of deals, we've had to do the hard stuff. The easy stuff is like, a breeze. So I think that really makes you invaluable, and a lot of times, being reminded of why am I here? Because I don't think a lot of people grow up and say, I want to do lending, or I want to be in real estate. I want to be in real estate. You just know the fire that you had as a first-time home buyer. Like, I remember really, really wanting this, and I remember how I felt after closing and didn't get a lot of those things. So being able to say, hey, here are all your options, and which way you want to go, what works best for your family is what we're going to do. Truly being invested in what's best for them as a family, I feel like makes you invaluable.
Thank you. And there are so many clients that I've received, like once I started talking about my process of when I purchased my first home, because I was actually denied on my birthday, September 22nd of that year. I ended up calling the listing agent, literally crying, like, my loan got denied. But at the time, I didn't know that all lenders weren't created equal. I just thought, okay, if one bank denies me, I have no chance. And when I talked to her, she paired me with her preferred lender, and I was able to still close. And when I talk about that to my audience, I got so many like young Black girls that were like, you did this at a young age and you figured it out and you made it happen. I want to do the exact same thing. And I don't ever know, how much someone is going to be approved for when they come to me. I just know that they want to purchase a home. And I feel like that is our job, is to figure it out. No matter how we have to figure it out, let's figure out how to get this person into a home.
Absolutely.
So thank you for the dedication over the years.
Oh, thank you.
Now tell me a little bit about, how does someone get through the approval process? What are the qualifications? What are the requirements? What does that look like as far as a traditional employee, like someone who is a W-2 earner that receives or that files their taxes regularly every year? And then for those business owners, entrepreneurs, people that are self-employed, that are like me, trying not to give all of their money to the IRS at the end of the day.
Right. Okay, so let's start with our W-2 employees, because honestly, when we break it down to the simplest terms, it's not just like a refinance sounds really scary. A lot of times my self-employed borrowers or my business owners feel very intimidated about the process. But when you break it down to the simplest format, it is the same.
Okay.
Right? So if we start with the wage earner, for whomever, wherever you are in the process, the first step I believe is to get in line with what your goals are.
Okay.
Right? So we start with the conversation. Hey, what does your time frame look like? Where do you want to be monthly?
What are you comfortable with paying?
Yes. Where did that number come from? Let's talk through it. Let's figure out what your goals are. Where do you want to be?
Okay.
Once we identify that, and a lot of times I will say, what area do you want to be in? Okay. So
that's going to determine your monthly mortgage off the bat.
So during the initial conversation, before I have credit or anything like that, we're determining what are your goals, and we can sometimes find the misalignments, right? So, okay, I want to be in Gwinnett County. I want the best school districts for my 4-year-old, and I want to spend $1,000 a month. So we can visually say, great, let me show you what $1,000 a month is going to get you as far as the purchase price. And
How does that feel? We really, really go in depth during the discovery call. Let's map out your goals and make sure that this is the step you want to take.
Okay.
So once we finish with the goals, we're gonna do an application. Right? So that word a lot of times seems scary. I'm trying to figure out.
Is it a hard pull on my credit? Is it gonna drop my credit score into the 500s? And
yes, no, it's not going to drop your credit score, but yes, absolutely, we do have to do a hard pull in order to get you an actual pre-approval letter, right? Because in order to start shopping, you need a pre-approval letter.
Right.
So during that application, we're going to get credit pulled. We'll talk about income, go through work history, so we can really determine what is your buying power. So you're going to submit documents. Super short list. We just need a driver's license, 30 days of pay stubs, 2 years of W-2s, 2 months of bank statements.
Okay.
So if you want down payment assistance, give me 3 years of tax returns.
Okay.
So 5 items.
Okay.
That's it.
And that's easy.
And so I'm hoping that, we can kind of get that out there. It is the same things that you're going to need to get an apartment is what you need for a mortgage approval.
And almost the same amount of money, because what rent is on average.
I know.
First and last month, and if there's an additional security deposit, you're looking at
a down payment.
You might as well just add a little bit more money and
absolutely. It's because with everything rising, so is rent. Right? So, I mean, absolutely. We get those 5 things from you, and then it's pretty quick. Within 24 to 48 hours, we can have an approval structured. We're going to have a consultation at that point. Let's talk about everything that you qualify for. Now we're able to match you up with all the programs that you qualify for and let you know exactly what your buying power is. Okay. So from there, you get to do your thing.
Right. We are not home shopping. Let me look right here into this. We are not home shopping until we have an official pre-approval letter. You have to be pre-approved in order to home shop. And now what I'm seeing on the market, a lot of sellers are not wanting to show their home without a pre-approval. Before, it was just on our end, we want to make sure that you have, that you're a qualified buyer. But now sellers, in the listing description, it says, in order to view this home, you must email over a pre-approval.
Especially through COVID, it was like, okay, we really only want very serious people coming into the home. And I always, I know we both try to explain that it really is a protection method for the client. When you find a home, and this is one of the things that I didn't know when I was home shopping. I'm like, I want to buy a house, so the agent just wrote up an offer for me, but my stuff wasn't in order, so I lost earnest money. So when you decide you want to buy a home, you have to put money up as a deposit. And if you are not thoroughly and fully pre-approved, you're at risk of losing that money. So the reason why you need to be pre-approved before you can purchase is to protect you. It's to protect you. And your money, your time, your money. You want to make sure that you are fully pre-approved. But a lot of these questions that prospective home buyers have can be answered without, a credit pool and things like that. You can get all the information that you want and all the information that you need. But when you are serious and this is the next step you want to take, be prepared to complete an application, have your credit pulled, and submit all your documents.
Okay, perfect. And then briefly, what about all my self-employed
borrowers? So for my W-2 people, I needed 5 things. For my self-employed borrowers, I just need your driver's license, 2 years of tax returns, and 2 months of bank statements.
Okay.
So now we're entering into the area where so for the tax returns, what we do is we take a look at the last 2 years.
Okay.
What did you report to the IRS?
Okay.
And then that average becomes your income.
Okay.
So let's say the tax returns don't show a whole lot of income, right? Because with a whole lot of income for a self-employed borrower, there's a lot of taxes that you got to pay to Uncle Sam. So there are alternatives, stated income. So we can literally take your bank statements for the last 12 months or the last 24 months, personal bank statements. If you use your personal bank account for all your business, we can use that, or your business bank statements. Okay. All of the deposits into your bank account becomes your income, and we can use that as income for you.
Okay, because that was my route when we had our conversation when I was buying my third property. I was like, look, girl, we got to figure out how is this gonna work? I have the money.
Exactly.
Let's figure out how can I purchase a home. So
Exactly.
I'm like the hugest advocate of bank statement loans because it's like you said, the home buying process or getting pre-approved is already simple. You only need 5 things, but with that, I was like, this
here's the money.
Yeah, this feels crazy that I can get approved so easily based off the amount that I'm saving.
You know, I always say, I got this like running joke that you need like 3 ingredients: credit, income, and assets or money. So it's like spades. If you have 2 out of 3, you're in the running. So like, if you know, I have like a strong, a strong 2. If you have strong credit and you have savings, the tax returns, the income piece we can work through. Let's just look at your bank statement. Or a lot of times if you have really strong income and you have strong credit, but you don't have a huge savings, we can supplement that. So wherever you are in the process, get started.
Okay.
Because there's never a no. There's like a not right now. There's a here's a plan. Let's do this. Wherever you are in the process, just get started and get the information.
Okay. And as we enter our last segment of the show, I opened up questions to my audience.
Yes.
To ask. I said, you know what? I'm going to be interviewing my preferred lender. What are your questions
Absolutely.
that you have? So
I love that.
One of them is to kind of piggyback off what you were mentioning about either not having all of the savings or not having certain things. One of the biggest questions that I always get, and specifically got when I opened them up, was if I'm able to receive a gift from someone, from a donor, what does that gift look like?
Yes, really good question. I'm glad they asked first, right? So all the money in a transaction has to be what we call sourced, meaning we have to know where it came from. So it's perfectly fine for a donor to give a gift, but we have to document it.
Okay.
So depending upon the loan type, we're talking FHA versus conventional, whatever the loan type is, the documentation may vary. Generally, we need that donor's bank statement. So they have to show they have the funds in their account as of the last 30-day bank statement.
Okay.
If they send that money directly to the attorney, whatever they're going to gift to you, the only other piece of document we need is a gift letter from them signed saying, hey, I agree to give, John Doe this money as a gift, and it doesn't have to be repaid. That's it.
Okay.
You really, really, really want to talk through what the plan is. A lot of times what happens is you get into the home buying process and you're telling people at church or you're telling your aunt and your uncle, I'm buying a house, and they're like, oh, let me just gift you this money. Any deposit into your bank account over a certain percentage of your income has to be documented. So it's very, very, very important that you know all the money has to be sourced. We have to paper trail it.
Okay, and just as a side note, because we've had a lot of donor situations where the donor became uncomfortable with submitting their bank statements.
Right.
When you submit the bank statements, it does not have to go to the borrower themselves. It can go directly to Lashonte. You can reassure the donor that their personal information is not.
I've had some funny conversations with Uncle Joe, Uncle Joe, come on. I've had a lot of conversations with donors, just making them comfortable with sending those bank statements to the actual lender.
Right. Okay, and then 2 more quick questions. Do you offer any type of non-QM loans?
Yes. So what a non-QM loan is, basically a non-qualified mortgage. So we talk about the traditional mortgages, FHA, conventional, the traditional loans that come from the government. A non-QM loan means the money's not coming from the government. It could be private lenders or different fundings and things like that where a non-QM loan comes from. Many of the bank statement loans that we just talked about fall into that non-QM bracket. Okay. And what that means is alternative ways. So if you don't fit into this box, or this box, there's something, I got something over here, that I can get you to fit into.
Okay.
So absolutely.
Okay. And then lastly, what can borrowers do to prepare themselves to purchase a home, even if they're not ready within the next 6 months to a year?
Great question. Work on those 3 ingredients.
Which
Credit.
is?
Go to annualcreditreport.com, get a free copy of your credit report. Let's make sure everything looks accurate. Let's see where you are credit-wise. Because generally, to position yourself in the best space possible to buy, we want to see you around a 620 credit score at minimum. There are loan products that you can get into with credit scores down to a 500, of course, but to get you into the best position possible, you want to be at least a 620 credit score. So let's work on getting the credit where it needs to be.
Okay.
Income. What type of income do you have? Let's make sure we have stable and predictable income and employment. And then assets, of course. It's always best. Even if you are getting down payment assistance, save as much as possible. The more savings you have, the stronger your application is. So work on those 3 things. But really, you want to talk to a professional first. So reach out to your real estate agent, get connected with a lender. Make sure you're on the right track. Because a lot of times we think we're worse off than we are.
Right.
Sometimes we think we're closer than we are.
Right.
So you really want to get a professional opinion of where do you stand.
Okay.
And let's make sure, even if we're 12 months down the line, 6 months down the line, here are the things that you need to be working on to prepare yourself to be able to buy.
And I always say, aside with the 620 credit score, also just think of 7% to save. 3% for your down payment, 4% for your closing costs.
Absolutely.
Of whatever the purchase price is.
100%.
So if that's 300, 400, 700, whatever that looks like, the more savings that you have, the more better, because it gives you leverage to be able to compete against
100%.
other buyers.
Absolutely.
So thank you so much, Lashonte, for coming. It has been such a pleasure having you here.
Thank
and
you
I
for
appreciate
having
you.
me here.
Absolutely. And I look forward to all of the amazing things that
I
you're
can't
going to
wait. I can't wait. I love what you're doing to educating the community and the audience, giving them some useful information. So bye now.
Thank you. You know, seriously, the name of this episode is going to be Bye Now.
No.
Bye Now.
No. Thank you, Bree.